I'm gonna get back to that story, Sonny. Just, just you listen to Boomer Great One. He's gonna tell you about how it was back in the olden days, back before fire, back when we walked uphill for everything. In fact, we didn't even have a concept of downhill because there was no downhill. Everything was uphill. We thought that was normal. We didn't even have a word for it because there was no alternative. It was uphill all the time. You just need to reach down and grab yourselves by your bootstraps and pull yourselves up, Sonny. Because when I was your age, I bought a house for $25,000. And I made that money on my paper route and bussing tables at the local cafe. And if I could do it, you can do it too. You just need to reach down and pull yourself up and just buckle up there, buckaroo. God, I hate boomers.
That was odd. I love it when bad things happen to bad people. Like there's no a corporation is an entity, but it's not people. But the people who head up Hewlett Packard are bad people. If you remember about a year or two ago, Hewlett Packard, like Adobe, was requiring you have a subscription service to buy theirs and only their ink. And if you did not have the subscription service, your printer wouldn't work. That's why I go with Canon or Brother. And I will drop you like a fat STD infected loud woman if any of you other printer companies decide to do something similar. It is a Hewlett Packard and equivalently, I put them on par with each other. You have ran out of any ideas, yet you cannot accept the fact that maybe we're just a printer company, you know? Maybe this is it. Maybe we just make hamburgers, right? Nope. Some egotistical NBA douche canoe. We got to get the profits up, bro. I got to make it different, bro. And look, investors, if you want higher rates of return, go invest in edgy new tech. All right. Maybe get used to having a dividend. I don't know. Could you go back to fundamentals, cash flow, dividends? I know it's boring. I know capital gains, bro. It can't go on forever. You need the underlying at the end of it. Mark my words. At the end of the day, you're going to need the profits. You're not going to, I mean, your stupidity, the financial market, the people in charge of the financial markets, your stupidity will never cease to amaze me. There will be a day, I think I will live to see the day, the average PE ratio, not during a market bubble, though it would be a bubble, the average S&P 500 PE ratio will reach 50. You guys will have a PE ratio of 50. And then the talking heads, well, it's moderately trading at an undervaluation. It's only trading at a PE of 41. Right? Your 50-year mortgages, your PEs with 50, right? A 2% rate of return's really good. But you ran out of ideas, right? So that you thought to take a printer and somehow fuck your clients over by forcing them through a subscription service to buy your ink and only your ink. Fuck you. I don't care if they rescinded that, right? I had no ill will. Like I had Hewlett Packard computers in the past before. I had some printers. You sure the fuck aren't buying your shit now. Same thing with Hyundai. Hyundai, okay, cheap Korean. Okay, maybe I'll get one of those. I had good luck with other Korean cars. I like Kia. Oh, now I need a software subscription service to unlock my car so I can unlock. Somehow you managed to lock the brakes. You managed to brick your car so I can't change the brake pads. That's Honda. I'd expect a little bit more from South Koreans, a little bit more Asian honor. Oh, I expect American corporate douchebags. That's all they do is after they're done working, they go down to the strap-on store and say, which strap-on upgrade should I get, bro? I got to fuck over my clients. I wasn't expecting that from Hyundai. Well, Hewlett-Packard. I wonder what the I wonder what the stock market reaction was. This is from about a week ago. Hewlett-Packard to cut about 6,000 jobs by 2028, ramps up AI efforts. I thought it was going to be, oh, you fucked over your client and people aren't buying your shit no more? Nope. You're going to. There's only so many quivers there's only so many arrows a quiver contains your arrows. There's only so many arrows in the quiver of corporate douchebaggery, right? DEI, ESG, leveraging synergies, just in time. I mean, there's always going to be a new one, right? Open office, and the most modern one, AI. AI, that's the new buzzword, right? AI. Not one of these things have worked. At the end of the day, why we get a shit product at an unfair price? Why does everything break? Why is it the second gilded era of America? Because at the end of the day, the people who run these companies are lazy people who don't want to put in the hard work. That's it. I thought it was not possible. I'm like, no, come on, you can't be in charge of a $50 billion company and go with acronyms and sayings and phrases and fads. Nope, that's what they do. AI. And the AI industry ain't making no money. So I thought, oh, you treated your clients like shit and your sales went down, which I might look up here in a bit later. Nope. You're cutting 6,000 people because AI, bro. You guys will spend billions of dollars replacing people instead of hundreds of millions of dollars, a tenth of the cost, training them to do a better job. Someone explained it. The dream for most of these people is to have a corporation merely be a sheet of paper in Delaware that owns no assets, only IP, and the factories are all outsourced. It's just a piece of paper that makes money. You don't employ people. It's not going to happen. It's not going to happen. You are going to fail. All you dumb motherfuckers thinking you can replace human beings with AI. You can replace your executive staff. You could replace the MBA douche bro who came up with the idea of, hey, let's have subscription service. You can replace those people, but you're not going to be able to replace your drivers, your people who actually work, your accountants. You might be able to stream, but you're not going to replace. You're not. Good luck. Good luck with your latest toy. Good luck with your latest fad. Hewlett-Packard to cut about 6,000 jobs by 2028, ramps up AI efforts. Hewlett-Packard said on Tuesday expects to cut between 4,000 and 6,000 jobs globally by fiscal 2028 as a part of a plan to streamline operations and adopt artificial intelligence to speed up product development. Product development? Product development? You want AI to be creative? Why don't you ask people what they want? Why don't you not fuck them in the ass with the strap-on of subscriptions? I bet the people, they want printers that work. You plug it in, there's no complication. I bet you that's what they want. Just me, could be wrong. Do you want the AI? Do you want to hook up to the cloud? Do you want to improve customer satisfaction and boost productivity? Oh, you want to improve customer satisfaction? Have you thought about not fucking them over? Hewlett-Packard's teams focused on product development, internal operations, and customer support will be impacted by the job cuts, CEO Enrique Loris said during the media briefing call. We expect this initiative will create $1 billion in gross run rate savings over 3 years, Loris added. The company laid off an additional 1,000 to 2,000 employees in February as part of a previously announced restructuring plan. Demand for, of course, CNN, you got to bump it around with all the advertisements. I wonder why mainstream media is dying. Demand for AI-enabled PCs had continued to ramp externally, reaching over 30% of HP's shipments of the fourth quarter ended October 31st. I'm pressing D for doubt. Demand for AI-enabled PCs. Isn't that all of them now? Like, right? I don't have a choice but to have Microsoft. Like, oh, wait, that's right. Linux. I do have a choice. I don't have Copilot shoved down my throat. Global memory chip price surge brought on by the rising demand for data centers could push up costs and pressure profits at the consumer electronics makers such as HP, Dell, and Acer. Yeah, until all those companies go bankrupt and we just have a flood of microchips on the internet. Morgan Stanley analysts have warned big tech's push to build out AI infrastructure has triggered price increases for dynamic random access memory and NAND, two commonly used types of memory chips, amid high competition in the server market. That's, guys, just install Linux. Just install Linux. Take your old computer, install Linux. That's it. That's all y'all. You guys don't. For 93% of you, right, the non-gaming computer user, you guys don't need this. You don't need this aggravation. Laura says that HP expects to feel the impact in the second half of fiscal 2026 with higher price increases. HP has enough inventory in hand for the first half. We're taking a prudent approach to our guide for the second half while at the same time implementing aggressive actions like qualifying lower cost suppliers, reducing memory configurations, and taking price action. Have you thought about training your employees? Have you thought about that? Company expects fiscal 2026 adjusted price per share between $2.90 to $3.20 below analyst average estimate of $3.33. HP expects adjusted first quarter profit per share between 71 cents. Wait, adjusted profit? Oh, quarterly. Okay, I see annual versus quarter. 73 cents and 81 cents. Revenue for the fourth quarter was $14.6 billion, beating estimates of $14.48 billion. Hang on. Let me take a look. HP sales. No, let me look up. Maybe Yahoo still has it. By the way, never go to a company's investor relations site because you get there like, we just want to let you know that we have to hire only the fattest, loudest minority women in wheelchairs. Like, no, just go to Yahoo Finance. Just go to Yahoo Finance. Just why is it not? Oh, God, Jesus. Give it up, bro. What's your net income? $3 billion. Just give me the. What is the fucking income? God damn it, man. $3 billion and the profits are declining. What are your sales doing? Sales 60. Woo! Your sales are going down. Of course, Yahoo, I gotta put this over here and I gotta scroll up. Wow. Sales took a hit. No wonder you're trading at such a low PE ratio. So when did you come out with that subscription service, Inc? Was that 2022? And then you lost about like 17% of sales? Sales have been flat, a little declining since then. What's the trailing 12 month? Oh my gosh, your revenues are flat. Going down if we adjust for inflation. Hey, here, have you thought about not fucking over your customer? Just that, right? Just wondering. What is your profits trailing 12-month pre-tax net income? It's going down. It's going down. Let me go to the stock price. This is the point I want to make. Let me take a look. HP stock price. And if I go to the max, here it is. All right, and this is the point I want to make. You can look at several companies, Disney, Ford, Electronic Arts, Target, I mean, there's probably 1,000 more, or certainly hundreds more, where like HP, they've done every douche canoe, douchebag fad, corporal bro, almost borderline private equity, cut costs, follow fads, don't be a fucking leader. And whatever you do not put out a good product at a fair price. That's the last thing you cut costs, bro. And if you've noticed, they all say the reason they are tripping over a dollar to pick up a dime and they are not thinking long term is because the corporate executive's compensation package is more or less designed and flawed, so designed to have short term or short medium term focus. You got to get the stock price up to this, bro, no matter what. You could be in a dying industry, you could be in a mature industry where there's just no growth, right? The stock is valued at what it is valued. There could be no room left to improve the product, get more sales, like an honest company would. And so what they don't care because most of their compensation is based on getting the stock price up, bro. And so what they have to do inevitably is short-term gains for long-term losses that will dwarf whatever short-term gains you get. They start cutting into the muscle. Classic private equity strategy. Take a company, cut the ever-living shit out of the quality of the product so you cut your costs. The momentum of the previous loyal customers come in. They eat your garbage food, looking at you, P.F. Chang, Denny's. They say this is garbage, but by the time people don't show up the next fiscal year, you've already suckered some poor sap into buying the temporarily increased stock price or profit price, which increases the stock price, the selling price. You've already handed off to some other private equity firm, heaven forbid, a pension fund that old people rely on. Some slightly even more dumber douchebag or person than you. Bro, I'm going to buy this thing. They totally turned it around, bro. And you would say, okay, you know what? Publicly traded firm, I could see your stock price and the reason Hewlett Packard you're engaging in this fuckery is because your executive teams wanted the stock price to go up so that they could get their bonuses and get the majority of their compensation. Ladies and gentlemen, look at Ford, Electronic Arts, Disney, Target. Go look at them. They did the DEI, ESG. Before that, it was like our carbon footprint. We're buying carbon credits. We're cutting this. We're cutting AI, bro. AI. Why is your stock price not going up? And see, yeah, all of you, whether you have a background in finance or not, you guys are all correct that this short-term gain to get the stock price up so I make my stock options, I get my bonus as a corporate executives, that is killing the quality and long-term viability of these firms. But it's been, and it's almost the same pattern. These companies peaked 2021, 2020, maybe. And ever since then, it's at least been stagnant or it's gone down. In Target's case, in Disney's case, significantly. And what you're seeing here, because they all employed they don't employ a good product at a fair price. They all employed fads, whether it was political, whatever, it doesn't matter. It's all fads. And what that, I'm thinking, maybe the board of directors, maybe investors are going to start looking at that and say, hey, you know what? Yes, they got a fiduciary responsibility. Yes, this may have worked in the past, but we're going to compensate our corporate executives to just drive up the stock price. It ain't working anymore. It's starting to cut into the quality. It's starting to cut into deliverability. We're starting to alienate our customers with subscription services nobody asked for. And now that the stock price is no longer going up but going down, this might be the end. Now, the psychology of the business management world is good. You will always be douchebags. You will always be douchebags. But we are reaching the limits of corporate do broism and corporate douchebaggery where you play these fucking tricks because it is no longer contributing to your stock price. You've been fucking with people for 3 to 5 years. People are getting sick of it. They're not buying. Let me look up Ford. Right? Ford, you made shit products, right? You outsourced all your engineers to Mexico because fuck Americans, right? Oh, and then you precious pussy, whatever you fucking Farley, you precious fucking pussy coming in. We need more mechanics. Well, have you thought about not making shit cars and having a record number of recalls? That guy. Oh my God. What happened yesterday? Why is it down so much? If I do max, is it? Yeah, there it is. Okay. Wow. It's even worse for Ford. Ford reached its peak in 1999. This doesn't follow the historical. Yeah, your glory days are behind you. Let me look up a rolled EA stock price. Oh, wait, that doesn't trade in, right? Because it's when are they being bought out? Okay, I guess it's still trading. When are they being bought out by the Saudis? They went up because the Saudis bought them. But yeah, you see, here was their peak in what was it, 2018, and then it remained flat. Oh, buyout. So I guess that will end. I guess that's the perfect way they. Oh my God. The Saudis paid a PE ratio of 60. You guys paid $60 per dollar in profit for EA? The Saudi Sovereign Wealth Fund, I forget the acronym. Do you need to hire me? Do you want to not get completely screwed over? Would you like me to help you out? What? I work cheap. Oh my God. Yeah, if Disney, come on, close. Oh, are we going to do this? Are we going to do this? That's what was slowing me down was the CNN website. With the stock prices no longer going up because we've reached the limits of corporate fad management, to call it more proper now. I like corporate douchebag, dude, broism, douchebaggery. I like that better. It's over. It's over. And for all of you that think AI is going to save it and get you all announced AI like the fucking sheep you are. You thought it was going to get your stock. Your stock prices aren't going up. Oh my God, is the market getting efficient? Did you investors pull your heads out of your asses? Hang on, let me look. Is there an AI index? Stanford AI index. AI index, 15 companies. This is just a firm selling it. I want to know AI index. Let me take a look. I don't want to report. I want a live traded ETF. Let's do it. AI ETF. Jansen, AI and big data ETFs. AIBD, AIBU. Big data bear, daily AI, 2 times share. AIBD. Let me look up AIBD. Go 5 years. Oh my God. Just goes down. 5 years. It was at 25. It's down to $6 or $7. Let's do max. Oh, it's only been, I take that back. The far as back as it goes is a year and a half. Oh, really? Come on. AI ETF. Let me look at this. See, you corpo bros are relying on AI to save your asses. You think this is it. Because you're like Disney. You're too lazy to sit down and write a good, honest movie with character development. You just want to like, well, we just mix some ingredients and we throw some girl boss in there. We get a loud, sassy girl, and then we get a pushy guy. We make all the villains white men, and then we have a leftist message, and then, oh, look, bean mouth. Well, why don't we make money? Because you're lazy. None of you are willing to do it. You're all lazy. At the end of the day, you don't lose weight. There's no magic pill like Ozempic for you guys managing your companies. You got to hit the treadmill. You got to hit the gym. AI ETF. U.S. News and Money. 6 of the best AI ETFs to buy for 2025. Oh, yeah, U.S. Money and News. What are the tickers? Global X Artificial Intelligence. Okay, let's just go with that one. The Global X Artificial Intelligence and Technology. Let me click on this. Let me see how your stock price is doing. Chart. All right, this one went up. Oh, wait, that's only a couple months. Why can I only look up? What's the ticker symbol? Why can't you just give me the ticker symbol? Okay, I'm just going to type this in, copy, and put that. Just bear with me, guys. I just want to see how the industry they're relying on, I want to see how well it's doing. AIQ. AIQ ETF. Let's go 5 years if it's even been back in 5 years. Okay. Okay, you're up. You're up about double. There's no PE ratio. Is that because you're a fund or because there's no fucking profits? Let's do the max. Oh, they're up. They're up. Yeah, they're up a lot. They're up 500% about. 400% since its inception in 2018. Okay. Of course. Are they making profits? Oh, God, I can't wait for AI to collapse. I cannot wait. AI industry profits. The overall market is projected to reach $300 billion, staggering $3.5 trillion by 2020. That's their value. I want to know, are any of them making profits? Okay, NVIDIA is not, I know it's tied to AI. NVIDIA it's a manufacturer. That's not AI. I want a pure AI company, not yet profitable. 95% businesses have yet to make money from the technology. Oh, I can't wait till you collapse. What you do, bro, is going to do when the AI industry collapses. It's not going to save you. But wouldn't that be great? Like, you guys are all relying on this technology. It's not perfected yet, right? And apparently it's going to cost trillions. Right? It's going to take years, right? What if it doesn't materialize, right? You got to go to the board of directors and there's an investor call. Well, what was your AI, bro? Well, yeah, the AI industry, like 3 years from now, right? Everything collapses, all right? OpenAI is gone. ChatGPT, it's gone. It doesn't perfect. It never achieves a critical mass. All you idiots in the media, what they said, right? Just me. I could be wrong, but I think it's all bullshit. I mean, I'm not saying there isn't like real math. I mean, yes, there you are going. I mean, obviously I've seen it. I think you way overestimated how applicable and valuable this is going to be. I don't think it's going to have any, I mean, it's some, but nowhere near the business application. Certainly not something that warrants a multi-trillion-dollar valuation. And when this shit goes south, and all it is a glorified search engine, and all you corpos, we're replacing it with AI, and your sales continue to go down like Hewlett Packard, and your profits continue to go down like Hewlett Packard. It's going to go down by even more because the AI bot cannot fix the problems that come up every freaking day and every freaking I can't go. Replace. I thought it was funny. We're going to replace Americans with second and third worlders because they're cheaper, bro. Yeah, let me know how that goes. Let me know how it goes. Yeah, we're just going to replace them with software and code. All right, let me know how it goes. No super chats. Good. I can't just watch these companies where they went up, they've stagnated. I can't wait to see Hewlett. I should come up with my own companies where it's like the AI Corporal Bro Index. You're going to stagnate or go down. All right, that's it. We'll see you guys later. Toodles.